Alright folks, let's talk about accounting. I know, sounds about as fun as watching paint dry, or watching C-SPAN. But stick with me, because it's actually not that scary. Think of accounting like this: 2 pockets in your jeans. Left pocket, right pocket. Money can only do 2 things. It can come into a pocket, or it can go out of a pocket. That's the whole secret. They just gave those actions fancy names: debit and credit. They probably did it to sound smarter at parties. I debit for a living. So what are these mysterious words? Forget what your bank statement teaches you. In accounting, debit =sign left side, credit =sign right side. That's it. Make a debit at the stop sign. Debits and credits are labels for 2 columns in an accountant's notebook. The goal is to keep the 2 columns balanced. For every action, there's an equal and opposite reaction. Real-world example: buying a cup of coffee. You received a delicious coffee, an asset. An accountant records that on the left, the debit side, but you paid cash. Cash leaves your possession. That gets recorded on the right, the credit side. So, how do accountants keep track of all these debits and credits without their heads exploding? They use something called a T account. It looks exactly like what it sounds like, a giant letter T. This is the groundbreaking technology they came up with. It's not an app. It's not a fancy spreadsheet with flashing lights. It's just a T drawn on a piece of paper. You have to wonder if the guy who invented it just got lazy halfway through. The T account is basically a mini scoreboard for one specific thing: cash, coffee supplies. The top of the T is where you write the name of the account. The left side is the debit side. The right side is the credit side. It's like keeping a tally. Now let's zoom out a bit. All those little T accounts eventually get rolled up into 2 big reports. The first one is called the balance sheet. This sounds official and boring, but it's really just a snapshot of your financial health at one specific moment in time. The name says it all. It has to balance. It's based on a simple, beautiful equation: assets equals liabilities plus equity. Or in plain English, the stuff you own equals the stuff you owe to others, plus the stuff that's actually yours. If they don't equal each other, you messed up somewhere. It's like trying to put on a shirt with 3 armholes. Something is very, very wrong. Let's break it down. Assets are all the good things you have that have value: car, house, cash in your wallet. Vintage Star Wars collection. For a lemonade stand, the stand itself, the pitcher, the cash in the box, lemons and sugar. On the other side, liabilities: credit card debt, car loan, mortgage, $20 borrowed from your friend Guillermo. Finally, equity. This is the part that can be a little tricky, but it's basically what's left over for you. The second big report is the income statement. If the balance sheet is a snapshot, the income statement is a movie. It tells you a story over a period of time, like a month or a year. Its job is to answer one simple question: did you make any money, or did you lose it all? This is your business report card. The formula here is even easier than the balance sheet one. Income minus expenses equals net income or profit. First up is income, also called revenue. This is the best part. It's the money you earn from selling your stuff or services. For our lemonade stand, it's the cash you get every time someone buys a cup of delicious, refreshing lemonade. When you earn income, you credit it. So when you sell a $1 lemonade, you debit your cash account and credit your sales income account. Of course, you have to spend money to make money. That brings us to expenses. For the lemonade stand, expenses are the cost of the lemons, the sugar, the paper cups, the little sign that says "Best Lemonade in the World." So at the end of the month, you subtract the expenses from the income. 100 minus 30 equals $70. That $70 is your net income or profit. You did it. You're a successful business owner. You're basically an accountant now. Go ahead, put it on your resume. I won't tell anyone.